Good morning, everybody, and welcome to the Seiler Wealth Management video blog. Today is Tuesday, August 16th. I'm Lee Seiler. Thanks for joining. And what I want to go over, first of all, I want to talk about the masses. And no, not masses that you wake up one day and say, wow, I have this mass on my arm. No. Okay? The masses, meaning the overwhelming amount of people that could either take one side or another. And sometimes both sides, as you look at this presidential election, which, the masses, doesn't matter, we're all going to be wrong. Anyway, the masses, in my 28 years experience, yes, I know you couldn't tell, 28 years doing this, my experience has been that the masses are usually wrong. And I build my money management, and when I invest clients' money, I look at what's the analyst community think about this? Even though I don't care what analysts say because they're wrong half the time. They're like weathermen, okay? But what I look at is usually when there's an overwhelming side being taken, whether a bullish side, a bearish side, whatever the case may be, typically those masses, that mass is usually wrong. And I'm just going to give you just a couple recent case in points. Back 2 months ago, Apple, which is the largest company in the world, look, there's no doubt Apple's earnings are not growing like they used to be. Their sales are not growing like they used to be. That's just natural. That's the way it is. When Microsoft was in its infancy stage, sure, it could grow earnings and revenues at 50% a year and double their revenues. And then all of a sudden, it went from a 40% growth rate in earnings to 20%, down to 15, down to 10, down to single digits. Well, that's what happens when a company matures. And Apple certainly has matured into the largest company in the world. All right. And I say in my last event, the 2016 report, I tell you this. I think that Apple, the company, Apple, has more to do with the economy than the election of a new president. Because whether it's Donald Trump or Hillary Clinton, they have a lot less say-so than Apple would in the economy. Because I will tell you this, if by chance it comes out that the iPhone causes brain cancer, this economy is going to hell in a handbasket very quickly. Because everybody that's involved in that Apple iPhone, from the retailer to the parts companies to the salespeople to research and development people, there's a problem. Could be good for the drug industry, but not good for the economy. So that being said, let's take a step back again and talk about Apple. Apple, which was, the stock was dead 2 months ago, every analyst on the street, pretty much, when I say every analyst, I'm saying the majority, the masses, were saying that Apple's going to $80, $85, the stock is dead, their earnings come out, they're not going to be great, it's blah, blah, blah. And I was concerned too because I started believing all the noise. And when you start believing everybody else's BS, then you have a problem. Luckily, I don't get emotional about stocks. I try to stay even-keeled and look at the facts. And that's what you need in an investment advisor. You can't have somebody say, oh my gosh, their earnings coming out, I don't know what's going on. You have to be calm. So, Apple reports earnings. They beat expectation. Things are not looking so badly. Then the stock, which everybody thought was down and out, all of a sudden in the last month has outperformed the S&P 500 by about 8 times. Apple's up over 10% in the last month. The S&P is about 1.5%. So it is absolutely outperforming the markets right now, recently. Then come to find out, Berkshire Hathaway, Warren Buffett's company, increased their holding in Apple by 55% over the last quarter. So they were accumulating. And that's, when you think about Warren Buffett, you think about somebody who is a value investor. He goes out there, and there's a difference between a value investor and a growth investor. A growth investor is looking for the next best thing, looking for those companies that are really ramping up their sales and earnings, may have new products coming out, but we believe that this is going to be hyper growth, and you're going to pay up for that. You're going to pay up for a growth company because they have that potential. Well, Apple now is a value stock. And a value stock means that the parts are worth more than the sum. So when you look at Apple that has $231 billion in cash, that's worth 1/3 of the company. And that's an asset that it may not be performing right now, but at some point is going to start performing because you're going to put it to work, whether it be in stock buybacks, whether it be in investing in other companies, whether it be in dividends. Of course, they continue to raise their dividend. My point is, And I'm going to get back to this because the masses are usually wrong. And what I'm seeing now that we've had a market that has rallied and has been hitting highs, but not hitting overwhelming highs. We're not seeing highs being hit on huge volume. Stocks up, the market's up 150 points on great volume, and they're blowing out numbers. No, it's kind of just drifting higher. But it's drifting enough that it's getting the analysts on board. And I've learned when you have 8 out of 10 analysts thinking that I don't see anything in the foreseeable future that can derail this market, that tells me you need to be starting lightening your positions. And we've been lightening our positions in the last couple of weeks only because we believe that the masses are wrong and they will be wrong again. How wrong will they be? I don't think it's going to be a bad wrong. Again, I go back and say there's no bear market in the horizon, but there is a 5 to 10% correction in the horizon, and we do see that. So you have to have the wherewithal to figure out where to go, because even though markets are correcting, sectors will rotate in and out. Look, there's some great sectors out there. Oil and gas starting to work again. Things are looking phenomenal in the oil and gas sector. Now, markets open today to the downside, and again, expected. My point is caution, please. Don't go out and start buying anything. I suggest that you talk to me if you decide you want to take a look at something or buy something. Give us a call. Let's talk about it. Make sure it meets your risk tolerance or your objectives. All right. Also, backed by popular demand, we're doing our Women in Investing, but doing it in webinar format. So Women in Investing, it'll be a week from Thursday. That is August 25th. And here's what we're doing, because we've had a lot of people say, hey, can you do it during the day? We're going to do a webinar on August 25th at noon. So we're going to give you guys a nooner. And then we're going to do it at 7 o'clock p.m. that evening. So August 25th, I encourage you to spend your lunch with me on the webinar. Women and Investing doesn't mean only women can attend. All right, that would be certainly sexist of me. But noon and at 7 p.m. on August 25th. Log on to my website for details. All right. As always, hope you guys have a fantastic day, and I'll be with you again on Thursday. I'm Lee Seiler. Have a good day.